Hi, everyone. Today, let's talk about the jobs report. Then we'll talk Tesla price cuts once again. Then we'll go over the economic calendar for this week. And then we have to go over the earnings calendar because next week, earnings starts. Then we'll go over the charts. Then we'll go over my results for the week and my thoughts going into Monday's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the non-farm payrolls that came out on Friday, on a day when the markets were closed, were actually not too bad. So they came in just below expectations, 236,000 from the expectation of 238,000. This is higher than I expected. Most of the jobs reports have been lower than expectations by quite a margin, but this was pretty much in line here. And they also revised February up to 326,000, so better result in February, on par here for March numbers. Unemployment rate actually went down to 3.5 versus 3.6, so better than expectation there. Hourly wages rose 0.3%, not too bad there. Still going up kind of fast, but not bad, 4.2% on an annualized basis. Looking at the report in context here, it was down from last month, 326,000, but pretty much on par here with December of 22. Had that huge tick up in January, and now we're ticking back down into more normalized ranges. And you can see here, chief economist from ZipRecruiter saying that pretty much everything is moving back in the right direction. In terms of by sector, you can see leisure and hospitality, one of the tougher sectors during COVID, is finally getting that rebound that we thought they might get. Healthcare and assistance, still pretty high. Government, always very high. Professional business services, pretty high. Transportation and warehouses, 10,000. But the big loser here was retail trade, construction, and then manufacturing and financial activities took a marginal cut as well. And to finish up here, they say this is great news for the Federal Reserve. They don't have to worry about the jobs market when they make their next decision, which most likely means we're going to get 25 basis points, since they're not concerned about the labor market getting out of control in terms of unemployment. And just to give that some context here, looking at the Fed futures, you can see it's now 65.5% chance that we're going to get 25 basis points. That's up from just below 50%. So big step up here today based on the non-farms. Obviously, next week we have CPI, and we'll take a look at the economic calendar later. But CPI is also going to play a big role in these percentages. Moving over here to Tesla, and they're cutting prices on more expensive models once again. They did $5,000 in cuts here for high-end Model S and X models, but they do mention that they had strong Q1 deliveries and a reduced tax credit going into the next year, and that these cuts should help drive more deliveries going forward. Of course, this is going to cut into their bottom line a little bit. They mention a $1,000 and $2,000 price cut for the Model 3 and Model Y respectively, so still cutting basically across their entire line. They've had really good margins, but they're definitely seeing some softening in demand, which is driving these price cuts. And lastly here, they talk about this being the second time the automaker has done price cuts, with some vehicles seeing up to a $21,000 price cut. So definitely some softness in the economy from Tesla's perspective, and they believe these cuts are going to push the company to reach 2 million deliveries per year based on these reductions. Moving over to the economic calendar here, you can see we have wholesale inventories on Monday. Not a huge thing, but it's interesting. Got a couple of Fed members speaking on Tuesday, but moving over here to Thursday, you can see we have core and headline CPI. Month over month, expected to step down from 0.5 to 0.4 for core. Year over year, actually expected to step up a little bit. Headline year over year, stepping down 0.8%. And headline month over month, stepping down 0.1% in terms of expectations. See how that plays out. Looking at Thursday here, we have initial jobless claims. This one has been pretty interesting here recently. We also have PPI. This is expected to step up from 0 to 0.2 here on the month over month, but stepping down 1.1% on the year over year number. That's interesting. And then PPI headline month over month stepping down, stepping up from minus 0.1 to positive 0.1. Also interesting. And then year over year number stepping down pretty substantially here for PPI. Retail sales on Friday, another huge economic factor here. Month over month was revised down to minus 0.1% from 2.3%. So huge step down. Core retail sales expected to come in at minus 0.3%. Month over month retail sales, minus 0.4%. And then that's what we're expected to get once again here. Year over year, revised down from 6.3 to 5.39. So retail sales expected to go much lower. Definitely interesting. And then we have Michigan inflation data here at 10 o'clock Eastern. Not a huge impact, but it's good to see where they think inflation's going to be. Overall, tons of economic data coming out this week, and we have to pay attention to all of it. Moving over to the earnings calendar, you can see we have Louis Vuitton, the first big company of this earnings season on 12 April, $452 billion company, high-end retail sales, always interesting to watch. Moving to Thursday, we have Taiwan Semiconductor, also very big company, definitely interesting to see how that goes. Progressive Insurance, Delta Airlines, a couple of big players here on Thursday. And then moving over to Friday, we have the heavy hitters here with United Health, JP Morgan Chase, Wells Fargo, BlackRock, Citigroup, First Republic Bank. That'll definitely be an interesting one. So lots of big earnings coming out in the mid to end of the week next week. Moving over to the charts, starting with the S&P 500 here. On the weekly chart, you can see we're right on top of that trend line that I was watching. I thought we might have broken down from it yesterday. Then we tested that lower, longer-term trend line and then bounced right back into the mid-zone. Right here, definitely could go either way, candle of indecision. I think we'll probably get a similar setup to what we had here going back to November, where we had a huge push up, candle of indecision, ended up getting a couple of weeks of upside. Not a huge move, but then we ended up getting some more pullback within a couple of weeks. And that's really what I'm expecting here on the weekly chart. Maybe we break above this level, push up to this 4,300 level right at the trend line, tag that, similar to this, where we go sideways for a week or two after that tag. And then we get a pullback down to 41.46, somewhere in that zone at the next trend line. I don't know necessarily if we have the momentum to break down here unless we get some major economic data to the downside. But right now, weekly chart, basically neutral, certainly could go either way. Momentum, still bullish. RSI, still somewhat bullish. It's worth noting that volume is stepping down here pretty dramatically. And really, you need volume to be stepping up if we're going to hold this rally into the next resistance. So certainly could pull back here. If it does, we're looking to the area of highest volume, 39.57 in this previous level. And then we have shorter term support down here at 38.91. So either way, could go basically in the middle of this range. Moving over to the daily chart just for a moment, you can see based on this trend, it does look like we're going to go bullish first. Was a candle of indecision here, but you can see we got off, found some support, and rallied into the end of the week. And then I want to highlight, we did get a little bit of a rally in the futures market after the jobs data. So this is likely going to trend a little bit higher here. Let's look at what those price targets are. 414 is the next major trend line of upside that we have. A couple of levels in here right around 413, and this is previous highs here, but really looking at that 414.80 level. If we can get above there, we have quite a lot of room to the upside around 424. So see if this plays out. Momentum is fading a little bit, but RSI is still strong. Haven't gotten to overbought conditions yet. It does seem like this is ready to break out a little bit further, especially with how quickly we found support after these 2 days of downside movement. Moving over here to the NASDAQ on the weekly chart. Same thesis, a little bit weaker, still below the 144 EMA here, 13,119. We also have a little bit of trend resistance here, 13,200. But if we can get above those levels, then we're looking at 13,600, which would be a pretty decent move higher from where we are. Overall, RSI still bullish. If we break out from here, similar to what we did from July into August, that would be a huge move. That would really push us all the way up to 14,900 at major trend resistance. That would be pretty aggressive over the next few weeks, but it's certainly possible here. And like I said on the SPY, the rally was in the end of the week. It does seem like that momentum is going to carry into Monday. Moving over to the daily chart, you can see we had that double top, which did follow through. We got 2.5 days of downward movement, which was a pretty decent pullback. And then again, at the end of the week, we saw that big rally engulf the previous day. You have to assume that this is going to go higher on Monday. Talked about that already, as well as the jobs report saying that this is likely to go higher as well. Futures went higher on Friday. A little bit concerning about momentum, but if this does step up on Monday and we get some bullishness, we should see more follow through. Again, CPI we have on Wednesday, so that'll be a big factor. RSI still bullish, not a ton of volume here, but maybe we see some volume follow through on Monday. In terms of price targets to the upside, still looking at that 321.81 level. We can get above these two levels here, then we're looking at 334 to the upside, which would be a big move. So major trend resistance here just above these previous highs, then lots of clear skies for about another 12 points after that. Moving over to the Russell here on the weekly chart, you can see this looks significantly weaker than what we've been looking at. We had a big bullish week last week, engulfed almost that entire move here this week, still at major trend support at 1730 or so. Momentum slightly bearish, RSI slightly bearish. Certainly could find support and push back up to the 1836 level. If we get below this trend support, then we have the previous lows down around 1650. But if we do get below those levels, then we have a lot of downside potential down to around 1470. So watch out for this one. We've been chopping in this zone for many months at this point, so we could continue to stay here and go sideways. Certainly a possibility. Might see an upswing to the 144 EMA on the weekly chart. That would be interesting, but right now, definitely at a critical level here to the downside. And if it does break down, that's going to be very bearish here on the Russell. Moving over to the daily chart here, it does look quite a bit more bullish. You can see the rally that we had, big down leg, 2 dojis in a row. And then we had the positive jobs data, which should push us up at least to this 177 level on Monday. That's what I'm expecting. So bullishness on Monday based on jobs data. MACD showing like it's going to trend in the more bullish direction here a little bit. We also are testing the SMA on RSI, so I'd like to see that hold and trend up a little bit as well. Certainly something that could show a little bit more bullishness. But like I said, we've been chopping in this zone on the Russell for quite a while here. And at this point, I do suspect that we're going to stay here unless we get some major economic data showing that the Russell is going to struggle more, which could be more regional banks failing or something similar to that. Moving over to the Dow here on the weekly chart, similar to the Russell, big push last week, but slightly more bullish here at major trend resistance. Last time we came into this level, you can see the huge rejection that we had the next week. So definitely worth watching there. If we do break back down to this previous low, that's around 316, and then trend support down at 313, 200 SMA sitting down at 308. So a couple of levels to the downside. You also have to respect this as a lower low compared to the previous low. But it's also worth noting that we do have this low going back to October. So low, higher low setup, and then low, lower low setup, depending on which time frame you're looking at. Either way, you have kind of mixed signals in this zone. Certainly could project off to the trend line. Otherwise, momentum slightly bullish, RSI slightly bullish. Looking to see if we can push above this trend resistance up to around 341.50 back at this previous highs. That would be interesting. If we get above there, then you have highs going back to April, January of last year, up around 350 or so. And then major trend line resistance up around 365. So a couple of levels to watch here on the weekly chart. Overall, slightly bullish going into the next week here for the Dow. Moving over to the daily chart on the Dow, you can see it looks like we're pushing into this previous consolidation area of highest volume, 339.55. That's my next level that I would be watching. And then you have the highs from this consolidation at 343.50 on the daily chart. Momentum basically flat, but stepping slightly bearish here. RSI still bullish. Basically no volume compared to what we were seeing at the previous lows, but that does seem like this is a pretty solid base and that we're seeing that follow through here now. And zooming out here, the last time we had a pretty solid base, you can see we rallied much further than what we had over the last few days. And it was similarly aggressive, right? So we had this couple of days of huge movement, slight consolidation, and then a couple more days of movement. This does seem like a first push in that kind of a move, and that we could certainly see some follow through here. So Dow is still looking a little bit bullish going into the Monday and Tuesday sessions. Moving over to the ratios here with the NASDAQ divided by the SPY. Kind of run out of momentum here. We're sitting on the highs going back to August. Since this is a ratio, it's not necessarily overbought or oversold, but we are in a zone of pretty decent extension to the upside. Certainly could just go sideways from here. Maybe we see a little bit of a retracement and a move higher. Right now, I do think the NASDAQ is going to outperform the S&Ps just because of the economic conditions. But it's had quite the run here. You can see this big move, bull flag, big move, and now we're in overextension a little bit. So might see some even performance between the two major indices. SPY versus the Russell, on the other hand, SPY massively outperforming, which means the NASDAQ is also massively outperforming. MACD, tons of momentum. RSI, just now getting into overbought conditions. We have been higher than this before, but right now the SPY is definitely on a run, and this can continue for quite a while. You can see many weeks of underperformance here from the SPY. We've seen many weeks of outperformance in a row, just like we had here from February of 21 all the way to January of 22. So this just looks like another period of outperformance here for the SPY, which means the NASDAQ is outperforming the Russell as well. So you got to be a little bit more cautious if you're going long the Russell. Moving over to the SPX divided by the M2 money supply. Talked about this potentially getting some follow through here. We did test the 144 EMA and the 200 SMAs. We talked about that happening. But then we got a doji. So we're stuck here at indecision. This could absolutely continue higher, but it seems more likely that we're going to see a pullback. This is a big double top. That would be very bearish. You also have this kind of head and shoulders type pattern with a very slanted neckline. Definitely interesting to watch there, but overall on the weekly chart, this still looks more like a double top, dip, midpoint. If this comes over here for a couple of weeks and then fails, that would be super bearish. So keep an eye on this. If it breaks out, got a little bit of room to the upside, about 5%. But if we go sideways and fail, and we take out this midpoint here, then we have to be looking back to these October lows as a potential price target. So keep an eye on this chart. We'll talk about it every week. Definitely looking at these weekly closes. It's also worth noting that if we don't go a little bit higher here, this is going to be a lower high setup, and that would be very bearish as well. Moving over to SPX divided by gold. So we got kind of an inside week, which is generally bearish, but we're just above that support line here, looking like SPY still might get some outperformance. Talked about this last week, looking like it had some follow through. Then we gapped down and fell, stayed above support, so still in that bullish potential, but this inside candle does tend to lead to more bearishness. So kind of like what we saw here, where you had a bounce, couple of weeks of upside, inside week, and then you get the follow through to the downside. So that's kind of what I'm looking at now that we have this inside bar. You'd want to watch this one pretty closely to see if we get below the 22 level. If we do, then we're probably going to retest these lows. And if we take out those lows, there's a lot of downside. We'll probably see more of a waterfall sell-off in the SPY versus gold, which means gold is going to be a little bit better performing asset, at least in the short term, if this does start to break down from where we are, which, like I said, does seem possible. MACD not telling us very much here. RSI, though, got back below the SMA. We're below the 50 line, which does agree with the bearish thesis here on this ratio. Moving over to Apple and Tesla here, you can see Apple, candle of indecision on the weekly chart, tested that major resistance. Now we're stuck. Does look like a potential for a turnaround. You want to see that follow through on the next week's candle. If you do get it, then we can expect a bigger move down. Otherwise, bullish momentum, bullish RSI, and you still have to respect that. So certainly could follow through up to 170.90. That would be interesting. But candle of indecision at resistance does tend to lead to more negative prices, in my opinion. Looking at Tesla here, now you have a high and a lower high setup, just like we were talking about on the SPY versus the M2 potential setup. So you have this high, bounce, lower high, pullback. And if this follows through and takes out this midpoint on the weekly chart, that's going to have some huge downside potential here. So keeping an eye on this one very closely. If we do take out 163.92, then there's going to be a lot of downside potential. There's also some gaps in this week of the 23rd in January here. So look to fill those gaps. I believe it's around 145. You would definitely expect to fill those gaps if this midpoint breaks down on this high, lower high setup. Moving over to Alphabet and Meta here on the weekly charts, you can see Alphabet had this triple bottom and a slightly higher low here in March, and now we're pushing much higher. We're about to take out this previous high, so this looks pretty bullish. If we push through this previous consolidation, that'll be up around 118, 119. So that looks very strong, momentum strong, RSI still strong. Looking at Meta, similarly bullish here, but it has a little bit more resistance up at the 200 SMA, as well as the 144 EMA up around 232.20. So still bullish, up above support. A little bit overbought here on the weekly chart, so that might be a little bit of resistance here for Meta, but overall the structure is still bullish. Moving over to consumer staples versus discretionary here, you can see we've had 4 weeks in a row of bullish price action on staples, and this does look like it's going to go higher. We've been watching the 76 level for a while. If we get above resistance where we're at right now, and then above that we have 77.50. So overall, still watching for this to go higher into this zone. Momentum bullish, RSI still bullish. And then when you compare this with discretionary, we had an inside candle on the weekly chart, definitely bearish going into next week. We're right at the SMA here. This crosses down below the SMA on the RSI. That's going to be very bearish. We also got above the 50 level, and now we're crossing back below. Also another bearish signal here. Momentum slightly bearish. If we're going to go lower, you want to see it get below the VWAP, which is propping up this weekly chart right now. You can see the last week is where we started at VWAP and then got the push into this resistance zone. We broke down from that level, tested VWAP again, found a little bit of support at the end of the week. So might see a little bit of follow through on that, but overall I'm expecting the next week or two to be bearish here on discretionary. Moving over to the energy sector as well as healthcare here, you can see we gapped up on the OPEC news for energy, hit the 21 EMA on the weekly chart and then sold off a little bit. Momentum in the shorter time frames is a little bit bearish, so I'm watching that. We're also at the SMA here on RSI, looking for a little bit of a pullback and then maybe a continuation to the upside. I am still overall bullish on energy, so I do want to see a little bit better entry here and then the continuation probably up to area of highest volume up around 90.28. Also have overhead resistance at 87.37, so watching that as well. Looking at healthcare, you can see also similar to staples, 4 consistent weeks of bullish price action. Lots of momentum on this last candle. MACD and RSI both showing lots of bullishness here on healthcare. Looking for it to push up to this previous high up around 140.23. Definitely some volume to get through here, basically right where it's at, and it's at resistance, so watching that as well. But I do think that this is likely to push through and retest these highs here on healthcare. Moving over to transports here on the daily and the weekly chart, highlighting the inside candle here on the weekly. Came off that area of highest volume, which also coincided with the 55 EMA, 9 EMA, 21 EMA, lots of overhead resistance right in this zone. And you would expect this to follow through to the downside. Might come up a little bit higher and test some of these highs from this previous level. That would be interesting, but right now this looks bearish, and it does kind of have that head and shoulders feel to it, where you have a left shoulder, head, potential right shoulder here, and if this breaks down below trend support here, then you have to be looking to these previous lows down around 197.50. So overall, transports looks kind of weak. Momentum bearish, RSI bearish. You can see that push up to the SMA. Rejection from that level definitely looks bearish. It is a little bit mixed here on the daily chart though. RSI showing support at the SMA, so slight bullishness. Definitely interesting. You can see that big engulfing candle here on the daily chart. Had a gap down, was looking to see if this was going to be an island reversal type setup. Didn't quite work out that way, gap down and then rallied. So still indecision at this point. Daily momentum looks like it might have a little bit of follow through to the upside, but overall I would expect the weekly chart to be more dominant in the coming week or two. Moving over to yields here just for a moment on the weekly charts, you can see we're still hovering above the 55 EMA on the weekly charts. Momentum on both charts is still bearish and both RSIs show bearishness, but we're holding up at this level and we got that rejection basically at the end of the week on the non-farms. As long as the labor market continues to look strong, yields are probably going to stay higher. That means the Fed is going to be a little bit more hawkish. 10-year similarly got rejection at support and it's holding up here. The only thing that's going to push it lower next week is probably CPI. Do have to keep an eye on that. If that does break down here, then we should expect the Fed pause and then we'll see what happens after that. But right now, yields are still holding up. Labor market still fairly strong, although it is showing some signs of weakness that we saw in the reports last week. Moving over to stocks above their 50-day and 200-day averages here on the weekly chart. You can see the 50-day average has been making a series of lower highs here, and this looks like another lower high setup. If this does follow through to the downside, that would be quite bearish, definitely something to watch. RSI, neutral. Momentum moving in the slightly bullish direction, so it's something to watch. Could absolutely bounce from this level and get back into this zone. That would be interesting. Looking at the 200-day, this does look more like the head and shoulders type pattern, though, where we have left shoulder, head, right shoulder with weakness here, which is interesting. We do establish that lower high compared to the head on this right shoulder, and this does follow through and take out these levels. That's going to be very bearish. RSI more bearish here on the 200, but momentum is still moving in the bullish direction, so keep an eye on that. A little bit of conflict on the indicators right now, but remember, prices are king, and right now we're showing a lower high setup and more potential downside based on the 200-day average. Moving over to the dollar here on the daily and the weekly chart, you can see this down move that we've had on the daily chart, finding some support at this previous low. You can see what that looks like on the weekly chart, where we had the big run up, the big sell off into this wedge, broke out of the wedge, showed bullishness, and now we're retesting that low. If this ends up being a double bottom, then we might see more choppy price action, or maybe a higher low, or maybe a higher high here. That would be interesting, but momentum still bearish, and it's probably sitting here waiting for CPI. I thought we'd get a little bit more movement on the dollar from the non-farms, but we're not really seeing that right now, so this might be holding for CPI. We'll see what happens there. CPI is obviously going to have a big impact on the Fed, and the Fed probabilities have a big impact on the dollar, so definitely something to watch. Still in a holding pattern, still at support, and we're just waiting to see which way the dollar goes from here. Moving over to J&K here on the daily and the weekly, you can see we had a couple of days of downside, tested the 9-day moving average, found a little bit of support. We're back above all the daily levels here, 200 SMA, 55 EMA, everything is to the downside. Does look slightly bullish on the daily chart, so you have to keep that in mind. RSI showing strength. Momentum still fading here on J&K though on the daily. Looking at the weekly, still bullish movement, still above the SMA, finding support in the zone, but it's worth noting how long we've been in this area. We got into this zone in June of 22, and really we've been chopping sideways since then. Had a little breakout above, had a little breakdown below, but back in this zone here with no clear direction. Inside candle on the weekly chart, maybe we see a pullback. You would expect these lows to hold based on the price action that we've seen over the last several months. Momentum, very minimal, but slightly bullish. RSI, also minimal, but slightly bullish as long as it's above the SMA here. Overall, still waiting for some direction on J&K. Moving over to TLT on the daily and the weekly. We've been talking about this for quite a bit now. It's very bullish. We have a low, higher low set up, looking to take out these previous highs. Weekly chart, also bullish momentum, looking at the 55 EMA at 109.49 for your next price target. If we get above that level, we've been talking about the longer term resistance up around this 110, 111 zone. And then if we can get above that, you're looking at 115 to 117 in this previous high. So consolidation area from May, June, low resistance, high resistance for those next price targets. Right now, it seems like we're going to get into that level. Usually the first test fails on these EMAs here, so maybe we find resistance at the 55, come back down, and then reset back into this area of highest volume. That would be interesting. But right now, looking at the MACD here, moving in the bullish direction, RSI looking very bullish. You can see huge volume going back to March at these previous highs, and we're right here again. Slight pullback, big push up. Overall, TLT still looks very bullish going into the next week. Moving over to the VIX here to finish up with the charts on the daily and the weekly view. You can see we bounced through a couple of wicks to the upside and we're selling off. Looking at trend support down at 1787. Still watching that 1815 level, but looking at the weekly chart, you can see this long-term support that we have going back to December of 2017. Multiple reactions, December 19, June 21, as well as November 21. Now we're back in this trend support level, looking to see if we break back up and push back into the 20 to 2250 level. That would be interesting. Momentum on the weekly, still bearish. Momentum on the daily, still bullish. So mixed results here on the indicators. RSI on the daily showing weakness. RSI on the weekly also weak. So might see a pullback. If we get below this level, then we have to reassess the thesis and see what happens from here. Right now, still expecting to find a bounce in this zone back into the 20 to 2250 level. Moving over to my accounts here, looking at my positions, you can see I have a bullish position on the IWM and bullish puts here on the Qs. I do think we're going to see a little bit more bullish price action on Monday based on the non-farms that we had on Friday. Futures rose after that about 0.5 to 0.75%. So I would expect that to follow through here on Monday. And fortunately, I'm pretty well set up for that kind of a move. Over the week, I made about $330. So not too bad for a week where the NASDAQ was down a little bit. It was a little bit choppy in there as well. We had 2 days of downside, but that last day on Thursday was pretty bullish, so a little bit of a reversal of conditions. And like I said, I do expect that to follow through to the upside. Most of big tech still looks very strong, but it is interesting to see consumer staples and healthcare continuing to outperform at least a little bit versus discretionary. So definitely some rotation into security, but it seems like big tech is also an area where people think there is security. Doesn't seem like it's going to be affected nearly as much as some of the other pieces of the economy. So big tech, staples, healthcare, all doing well. I do continue to play that. Looking for a position in energy as well. I do think they will also do well, but we might see a little bit more of a pullback in energy early in the week next week. And of course, we have tons of economic data to watch, so keep that in mind during your next week of trading. Overall, short-term bullish, waiting to see if we get any reversal of conditions midweek based on CPI and some follow through to the downside. Let me know down in the comments section what you think of all the economic data coming out next week. Should be very interesting. We have earnings starting next week as well. Earnings season coming up. Got to watch out for all that. Do we think earnings is going to come in hot? Are they going to meet expectations, or are we going to start to see earnings per share start to drop off? Definitely interesting to watch. Otherwise, definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.